Good evening, everyone, and welcome. Today, we are going to discuss an extremely important global development that directly affects investments, commodities, currencies, and geopolitics. This is not a rumor, not speculation. This is a real-time geopolitical and economic shift that investors must understand calmly and deeply. The starting point of this discussion is Venezuela and the recent actions taken by the United States. The United States has taken decisive action in Venezuela by arresting its leadership under anti-narcotics charges. This is not merely a legal matter, it is a strategic move. Following this, it was clearly stated that until a favorable government structure is formed, U.S. administration and influence will dominate Venezuela's energy and resource sectors. This tells us one thing clearly. This is about control of resources, not politics alone. Let's see why Venezuela matters. Venezuela holds the largest oil reserves in the world, nearly 20% of global oil reserves, around 304 billion barrels. However, despite such massive reserves, current production is very low, about 1 million barrels per day, contributing less than 1% to global supply. This mismatch between potential and production is exactly what attracts global powers. If we see the China angle, this is not just Venezuela versus U.S. Many people think this is a direct U.S.-Venezuela conflict. That is a mistake. This is actually a U.S.-China strategic confrontation. At the time of these actions, Chinese delegations were present in Venezuela, negotiating security, infrastructure, and long-term resource agreements. So what we are witnessing is preemptive geopolitical positioning. Let me emphasize something very important. These figures are not YouTube rumors or social media claims. They are based on official government and embassy reports, including reports released by the Embassy of India, August 2025. Such reports outline natural resources, business opportunities, import-export potential, and strategic importance of a country. According to these reports, Venezuela has 304 billion barrels of oil. Venezuela has 4,136 metric tons of confirmed gold, and potential gold reserves up to 7,000 tons. Now let us come to gold, the backbone of global power. Currently, the U.S. officially holds 8,000 metric tons of gold. China officially reports 2,300 metric tons, but unofficial estimates suggest up to 5,000 tons. If Venezuela's gold comes under effective U.S. influence, America's total control of gold could far exceed any other nation. And remember, whoever controls gold controls currency confidence. So, dollar strength and global impact. When gold flows towards the United States, the U.S. dollar strengthens, dollar index stabilizes, other currencies weaken, and gold prices globally face pressure. This is why we must not blindly assume gold will always move up. Markets are cyclical, not emotional. Venezuela already experienced what many countries fear. Its gold reserves held abroad, around 161 tons, were frozen, similar to what happened with Russia. This sends a global message. Physical control matters more than ownership on paper. Let's discuss on gold and silver production reality. Earlier, Venezuela used to produce about 480 tons of gold annually. Production dropped to 30 tons due to sanctions. Once control shifts and sanctions ease, production can rise sharply, benefiting whoever controls the output. When it comes to silver, a supply-demand time bomb. Now let's talk about silver, which behaves very differently from gold. Silver is an industrial metal, an on-chain supply chain-driven commodity. Venezuela's capacity for silver. Average production, about 865 tons per year. Peak potential, about 1,675 tons per year. China's role here is critical. China imported 4,600 tons of silver in 2025. Future availability may drop to 1,600 to 1,700 tons. China has restricted 44 companies. This means silver supply chains are under stress. Retail investor mistakes in silver. Now let me give you a very important lesson from history, especially for silver investors. When silver rallied sharply and moved rapidly towards the 84 level, many people got trapped. Why? Because they became victims of FOMO, fear of missing out. The biggest example of this behavior can be seen in silver ETFs. At those peak levels, around 577 million ETF units were bought. This happened twice in history. The first instance was 27th April 2011. The second was 1st February 2021. In both cases, what followed was heavy selling. Why? Because retail investors bought at the top in excitement, while experienced players booked profits and exited quietly. This teaches us a critical lesson. Markets punish emotion and reward discipline. Market outlook. Observe, don't predict. So yes, all of this will impact the market. But at this moment, we must be very clear about one thing. There is no situation right now where we can give absolute predictions. Instead of predicting, watch how the market behaves. Watch how price reacts. Watch the flow of money. Because when you don't have full control or confirmation, speaking with full confidence can be dangerous. Technical levels and breakout awareness. Let me remind you of something we discussed earlier, the 70 level. We mentioned that 70 could act as a double bottom, but please understand this carefully. 70 is not yet a confirmed double bottom. However, the range between 71 and 74, which we showed earlier, is clearly visible. Above this range, a breakout structure is forming. Now, the key question is, will this breakout be a real breakout, or will it turn into a false breakout? This distinction is extremely important for investors. Discipline over excitement. This is where discipline matters the most. Do not chase prices. Do not fall into FOMO. Do not deploy all your capital at once. Remember, being active in the market is good. Being reckless in the market is dangerous. You should invest in rising markets, in falling markets, in momentum-driven markets, but always invest gradually, not aggressively. Regarding capital allocation and risk management, never invest all your money in one shot. The developments related to Venezuela, gold, silver, and rare earth materials are clearly having an impact, but the strength, duration, and sustainability of this impact still needs deeper study. And that is exactly why we study more, analyze more, and then come back with clarity. If we discuss on the oil outlook, as far as oil is concerned, let me make this very clear. There is no confusion there. Oil remains strongly supported. Finally, the key takeaway for everyone listening today is this. Markets are not about excitement. Markets are about patience, discipline, and understanding cycles. Those who wait, observe, and act calmly survive. Those who rush, panic, and chase usually regret it. Like the video if it helped you. Share it with someone who values clarity in markets. And subscribe to Money Explained by Sikander for calm, logical, long-term market insights.